As cryptocurrencies are absolutely tanking, gold and silver are not just holding still, they're actually increasing in their price. Today, on this segment of Market Masters, Dr. Kirk Elliott is going to be sharing a whole lot with us pertaining to not just the economy, but a lot of things having to do with China, with their money supply basically doubling as inflation increases all around the world, is what he calls a last gasp of air, which we're going to learn more about. But this has a very, very big impact on the near future and the distant future when it comes to the prices of metals as a whole, in both silver and gold specifically. Kirk, I want to say thank you for being here. Thank you for joining us again today.
Oh, it's so great to be with you as usual.
We got a lot to cover today. Everybody wants to know what to do. What are the big opportunities that everybody could take advantage of? You've been right on the money, no pun intended, but right on the money over the past few months, over the past few years. Silver is going up, gold is going up even higher, all-time highs, almost at $3,000 an ounce. And it seems like that's only going to continue as the economy starts getting hit more and more. People are going to be moving their money into those more safeguarded assets. So what can you share with us? What do we need to know? And then we'll talk about the investment opportunities of what people can do.
Yeah, so I want people that are watching this to understand fundamentals always drive everything, right? So when I look at a chart, when you look at a chart, when anybody looks at a chart, the chart just isn't a chart because it's there. There's fundamental forces that cause the chart to look like the chart, right? Which is usually legislative action, monetary policy, fiscal policy, some kind of administrative ruling, whatever, right? So what we're seeing right now with Trump is Doge is decreasing expenses. There's government employees being laid off everywhere as they start to shut down different agencies, right? Or minimize their um, reach and exposure because they're just unneeded.
Yeah.
Well, that's great. That's only one side of the equation, though. The other side of the equation is tariffs, reciprocal tariffs, tariffs on value-added taxes, which are consumption taxes of American goods going elsewhere. And Trump is mitigating all of that and inoculating, this is the right word, us from basically reciprocal tariffs of other countries on us, right? So all of this to say, in time, Trump is going to make America great again. It's going to be amazing. But in the kind of transitionary period, you're going to have some bloodbaths, I think, in certain markets, and because markets love stability.
Yep.
Like when you invest in any stock, right? Whether it's, I don't care, Meta or General Motors or you name it, you're saying, I believe in the leadership of whatever company you're investing in. I believe in their product, and I believe that the market's going to want their product moving forward. Therefore, there's stability there, and I want my retirement portfolio to grow. Well, whenever there's a hurdle or a hiccup, people hold back, right? They just stop. They just sit in cash or do something different because they don't want their hard-earned retirement assets to evaporate because of some kind of policy or
Percent.
correction or anything, right? So we're seeing a lot of hurdles right now, which ultimately are going to be absolutely fantastic and great for America, right? But as we look at what Trump inherited, it was nasty what he inherited coming after 4 years of Bidenomics, right? So one thing is credit card debt, right? So as credit card debt continues to accelerate, I mean, literally, about 120 days ago, credit card debt had surpassed $1 trillion, which
Wow.
is the first time it's ever done that, like ever. Well, today it's 1.21 trillion. We added $250 billion in credit card debt in the last 4 months.
Okay.
Now, Trump's only been in office for a little over 30 days, right? So this isn't his dealing. It's what he inherited. Now, who's going to get the blame for it? Him. Because whoever is holding the bag when somebody collapses is going to get the blame for it. And so you're going to start to see increased rhetoric from the left and from the banking institutions. It's like, Trump, you got to do something. He said, I am doing something.
Yeah.
But look at what I inherited, right? So So when I look at that, it's like, okay, there's problems brewing. There's going to probably be bank failures. There's going to be delinquencies and defaults on debt, right? And so as I look at that, who else thinks that this is probably going to be the case? I would say Jamie Dimon at
Okay.
JP Morgan Chase, because what did he do 2 days ago? He dumped literally $250 million, a quarter of a
I
billion
saw that.
dollars
I
of
saw
his
that.
own shares in JP Morgan Chase. Now, how do we know? Because when you're the CEO of the largest bank in North America that's a public traded company, you've got to disclose that information or else it would be, because there might be insider trading or whatever else. So disclose. He sold a quarter of a billion dollars of his own shares. Now, you or me, if we thought moving forward, remember stability in the markets, we want to invest in something that's going to grow over time. If he thought that things were going to look good moving forward, he wouldn't be dumping this stuff, at least not that much, right? You would hold on to it or buy more, but he's
Yep.
not. Warren Buffett, he just came out with his latest statement. Everybody always looks forward to it every year. The statement from Warren Buffett on Berkshire Hathaway. Um, and what did that disclose? It disclosed that he's sitting on $300 billion worth of cash. It's a massive cash position. So
So
what does
are
that mean?
these investors going into silver and gold themselves?
We don't know. We don't know who is. However, I would think it's more governments that are going in because Warren Buffett's obviously not really going into anything. He's sitting on $300 billion worth of cash, right? So, how did you get the cash? By selling things. He doesn't view the economy moving forward in the short term as something that's going to be very good either. So, you got Jamie Dimon dumping, you've got Warren Buffett, who's been dumping for like the last 6 months or so, waiting for a correction. When you look at Warren Buffett, what is his investing style? He's a value investor, not a values investor, right? Which would be somebody who says, "Oh, I don't drink, I don't smoke, I don't
Yeah.
gamble, I don't do pornography or whatever. So I'm never going to invest in those kind of socially objectionable companies." A value investor means I'm going to buy things at a huge discount because I want a value. So I think he's thinking markets are going to correct. He's going to sit on this cash until it corrects, and then he's going to gobble up some companies because he just doesn't invest in stocks. He likes to buy majority control of companies so they can run them. So you look at that, what's happening, and is Trump going to do great things for our economy? Yes, he is. Bringing us back to the initial vision of our founding fathers of tariffs paying for our bills, cutting expenses, listening to Jason, I can't remember which founding father it was. It was like Hamilton or Jefferson that said, never, ever, ever, you know, uh, if you're a politician, encumber more debt than what you can pay off during your life,
Okay.
right? Because it's not fair to the next generation to pass on the sins of the fathers, so to speak. But this is what we've done. That's why we have $37 trillion worth of debt that's mathematically impossible to really pay back unless there's a change in the system, right? Which is what's starting to happen.
What do you mean by that?
Um, Change in the monetary system as we know it, right? So we're starting to see Ron Paul, Elon Musk saying we're going to audit Fort Knox.
Yes.
Why are you going to audit Fort Knox? Well, they want to make sure that the gold is there. Why do they want to make sure that the gold is there? Just to make sure that it's there? No. I think they're repatriating gold. I think Trump is repatriating gold from all over the world, bringing it into CME COMEX depositories in New York to potentially back our currency, go back to a gold standard. There would be no reason to audit the gold unless you were going to do something with it. And there's no reason to bring it back unless you're going to do something with it. Well, they also need to revalue the gold from $42 an ounce, like we've talked about before, to market prices at least,
Yes.
right? So here's where when I read posts on X or different researchers and analysts, um, they think, well, gold should be at like $9,000 to $12,000 an ounce, but it's not. It's at 3,000. Well, that's based on the M3 money supply, all the money in circulation,
Okay.
right? So you take the amount of gold that's available, you look at the money in circulation, and that should give you the price of what it should be. Well, what they don't cover is things like petrodollars, eurodollars, things that have been printed basically off the books to actually give to Ukraine and to fund all these international stimulus programs and USAID and everything else, right? That's kind of off the books. That number, they stopped reporting years and years and years ago. It was called the MZM money supply, which would include all of the petrodollars and eurodollars.
So where
Since
where
they
does this
stopped,
where does this place things like what we spoke about, the M1 money supply with China?
so M1 money with China, that's the most immediate money that consumers are using, right? So that's the money that's in circulation that people can use to buy things.
Okay.
Well, in January, let's see, no, I'm sorry, in December of 2024, China's M1 money supply was $67 trillion. In January of 25, not even a month ago, it was 112 trillion. It's like they almost doubled their money supply in 1 month. 1 month, which to me, this is what you had mentioned earlier is the last gasp of air, right? It's the inflate or die moment. This just tells us that the China and probably the rest of the world is going into an inflationary death spiral. You
Gotcha.
know, it's like if we don't provide capital, we're going to go into a depression. And so what they're doing though, depression has to do with the business cycle. How many people are buying stuff? How many people are working? Well, if they're not generating revenue and the forecast is they're going to generate less revenue because there's going to be tariffs on these countries, they have to print their way out of it. They have to inflate or die. This is what China's M1 money supply is telling us they're going to inflate or die. Now, this global inflation is going to kind of reverberate throughout the world because China's not small, right? And they're the manufacturing superpower of the world. Well, their inflationary prices are going to be coming from China, but it's like hopefully we're not going to be buying so many Chinese goods anymore because of tariffs and we start buying American, create jobs here. This is Trump's plan.
Mm,
But like we've talked about before, and this is very important, what's good for America isn't necessarily good for the world.
correct.
You know, and so this is starting to happen globally. And as I look at that, there's times throughout history, I love looking at trends, right? It's kind of what economists do, and almost everything we do has a trend behind it. So let's look at a really long-term cycle of kind of the when moment. When do people invest in stocks and when do they invest in things like tangible assets like gold, right? So from just broad brush view, from 1930 to the 1960s, stocks outperformed gold.
Okay.
From the 60s to 1980, gold outperformed stocks. From the early 80s to about 2000, stocks outperformed gold. From the 2000s to 2010, gold outperformed stocks. Then 2010 to COVID, mid 2020, stocks outperformed gold. Now we're in this era where gold is outperforming stocks from mid 2020 until how long? These are usually 10 to 30-year cycles. You know, let's just call it 20 years on average.
Yep.
So we're about 4 years into gold outperforming stocks. And with everything that's happening globally, economic meltdown, inflationary pressures, new tariffs, a change in the money system, right? Which is what could get us out of this debt spiral in America? That wasn't just Biden. Look, he didn't create $37 trillion of federal debt. That's been presidents before him. Now, he accelerated it a lot. There's no doubt. But how do you get out of that? You have to change the system. This is why I think gold is coming back. You revalue it. And before you know it, if you count all of the money that's been printed, including petrodollars and eurodollars, this is where you see forecasters on X and these analysts that are making predictions of gold could be $20,000 to $40,000 an ounce. We
Gotcha.
don't know how much it could be
And
if you
when
price it.
when something like that happens, I know you always speak about this ratio, right? The 1 in 80, the 1 in 20, the 1 in 40
Yeah.
between silver and gold. So personally, as you know, I'm in both, right? I
Yeah.
like I like
Correct.
diversifying across assets all around the world
Mhm.
in different domains and sects as well. But when it comes to the future of what gold is now looking for, my question for you is, it's kind of like a multi-part question. When are we going to be switching those investments from silver to gold? Is it going to be a full switch, or is it going to be a partial switch while we keep silver and then move some into gold?
Partial switch,
That's what I
right?
figured.
So here's where we don't know what the price of gold could go up to because they stopped reporting how much money they printed off the books to go to all these other countries.
Okay.
This is where we know that based on M3 money supply, gold should be somewhere between $9,000 and $12,000 an ounce. But these extraordinary numbers, well, nobody knows how much money was actually printed. Somebody does because they printed it, but it's not reported. So here's where gold starts to go up to these lofty levels. How do we know if we should be in gold or silver, right? This is the ratio, the historical ratio that you're talking about. And there's been times since I got into this industry back in 2002 that not only does this long-term trend, what's performing better, stocks or gold, gold or stocks, right? Is which one of the metals, gold or silver, is performing better? And how do we know? Based on the growth, but really the ratio tells us which one is the one that we should be into. Well, from 2002 to '07, I was in gold. From 7 to 11, we're in silver. From 11 to 20, we were in gold. And from 20 till now, we are in silver because the ratio is near an all-time high. It's about 90 to 1, right? Meaning it takes 90 ounces of silver to buy
Yep.
1 ounce of gold. Historically, that number's been down to 20 to 1, but in 2011, we got down to 30 to 1 when silver blew up from $12 to $48 an ounce in 6 months. So I'm expecting, I like to underpromise and overdeliver. So let's just say we don't ever get those historical numbers again, but we will approach it. Let's just say we only get to 40 to 1. That's less than half of where we are right now. So when silver continues to outperform, which that's what means when the ratio starts to come down, silver is doing better.
Yep.
So we get to 60 to 1. I want to get rid of half of our silver position, probably, and roll that into gold because if silver comes from 90 to 60, that's about a third of
Okay.
a 33% move. You could increase your ounces by, let's say, 25% in gold of what you could have purchased today. If you were to buy gold instead of silver, well, why do that? If you can leverage higher growth silver to get you more ounces of gold down
So
the road,
it's not so much about the price, it's about the ratio.
it's about the ratio. And then at 40 to 1, maybe we get rid of the rest of the silver, like so the rest of the 50%. Now we're 100% in gold. Well,
Gotcha.
that would look like some of these longer term patterns where we're in gold for a while, right? And as gold continues to go up, as we looked on that big chart that we just talked about, um, you know, call it on average 20-year cycles. Well, by this time, maybe this starts to happen this year. We can do the first ratio trade. Maybe we can finish both of them this year. And that means you have probably a decade where you're going to want to be in gold. Again, I'm not God. I don't control the markets. Maybe in this accelerated collapse of the global economy, things squish with Trump bringing back a gold backed currency, with maybe some of the policies that we're seeing, other more traditional markets start to blow up again. Well, then you get out altogether. I don't care what we're in as long as it's reducing your risk and maximizing your return. There's going to be different times in history for different things. But right now, with this turbulence, with this uncertainty, with this turmoil that usually causes people to pull back and just sit on the sideline, don't sit on the sideline in cash when the inflationary pressures are really going up.
Because your cash is just worth less.
Yeah, even if you're getting 0% return, you're saying, okay, I'm not winning, I'm not losing, I'm just there. You
Yep.
know, you're not just there because if inflation's 15% and let's say you're getting 4% on your cash, well, you're losing 11% a year. You keep that for 8 years, you've lost 88% of the value of your position just due to inflationary losses, right? So, the only way to basically grow your portfolio over time is to outpace inflation.
100%.
Right now, happens to be gold and silver that do that. Maybe when you go back to lowering interest rates, lowering taxes, creating jobs like what Reagan did in 1980, what Trump did his first 4 years, and what he's going to do the second term is ultimately maybe some other asset is going to grow more, right? Like, or maybe it's going to be cryptocurrency. Maybe it's not even a traditional asset class anymore because the world has changed,
Yep.
right? I mean, cryptocurrency wasn't around during Reagan times. It was hardly around in Trump's first 4 years. I mean, it was. I mean, Bitcoin was around, but it wasn't as widely adopted as it is right now, or accepted, but it's becoming the norm. You've got ETFs that are now tracking cryptocurrencies, right? So moving forward, we always have to look at the fundamentals that make the charts look like the charts, right? Like in the last couple of days, there's been a bloodbath in cryptocurrency
Big
markets.
time.
Gold and silver both came down a decent amount, gold a little
Yeah, I
bit.
mean,
So,
silver's already back at nearly, 32, 33, and
right.
gold is basically at an all-time high.
Yeah. And there's this technical resistance of silver at 33, right? It's just like this invisible barrier. Hit it, went above that, and then they drove it back down. Maybe somebody was shorting it. I don't know. But to me, I wouldn't get squirrely feelings about, oh, is this going to continue to happen? No, it's just a 1 or 2 day or a week or 2 week blip, right? But the fundamentals are so strong and so there that I would use those opportunities to allocate into the dip, into a strong bull market, which is what we have. And a lot of times though, American investors or investors anywhere are kind of fickle, right?
Yeah.
And they hear a 30-second soundbite and they just jump on that train
They-
because people
yeah.
never want to lose their money. I get it. I get it. But don't act like a day trader. It's more medium term. I'm not a buy and hold forever kind of a guy either. That's foolish because things change. But there's intermediate trends like the ones that we just talked about, maybe the last 10 years, 10-year cycles, maybe they're 3-year cycles. They're longer than a day, they're shorter than forever, right? And we just allocate into that strength. And this is why I'm not, I know that you've got a blend between gold and silver.
Yep.
I don't have any gold. I'm all in silver
Really?
because I'm just I don't know, more of a purist in the ratio because I've been doing this for so stinking long, right?
Yeah.
But there's not a wrong answer. They're both growing. It's kind of a individual risk level that you want to take. Do you want to have a blended, more diversified portfolio? Do you just want to go into the one that's outperforming everything? Well, here's where maybe that's not right either. Because if you wanted to go in something that was outperforming anything, well, you should have been 100% into Bitcoin last year,
Yeah,
right? But
yeah.
that doesn't make sense for a lot of people. You never really want to do that. I just happen to love silver. It's a tangible asset. It's not something that could evaporate overnight. It's never gone to zero. Things never can go to zero because there's
It's real.
an intrinsic cost of getting it out of the ground.
Yeah.
Companies can go to zero. FTX went to basically zero. Enron went to zero when they went bankrupt. Any company that goes bankrupt, their stock goes to zero, right? So there's strength and safety in having tangible assets because they can't go to zero because there's a value in them as they come out of the ground.
For anybody that's interested, I know a lot of you have seen shows with myself and Kirk before, and we do this basically every week for the most part because these are important things, right? At the end of the day, if you want freedom, there's freedom in many aspects in life, but financial freedom is a base that gives you freedom in many other aspects in life. And that's really why we do these shows,
Yeah.
because we want to give people those opportunities to experience financial freedom, to experience financial abundance, so they can go and take care of everything else that they want to take care of. Because if you don't have to worry about your wallet, you can actually focus on a lot of amazing things in your life. And there are always amazing opportunities. If not today, tomorrow there will be another one. There's always amazing opportunities. But it just so happens that today and for quite some time now, metals have been that opportunity. Just a year and change ago, silver was at $18. Today it's almost 100% higher than that. That means that if you put, 50 or $80,000 from your IRA or 401k or whatever it may be, it would have been double by now in a matter of a year and change, something that would have taken decades in order to achieve any other way. So that's why we do what we do. That's why I do these shows. I know that I'm more focused and my job is more so on awareness in the spiritual domain, but this leads to that. It's all connected to that because when you're not focused on where's my next meal coming from, you can then focus more on how can I dive deeper into my soul. It's all connected one way or another. So if you do want to learn more, if you want to book a free consultation with Kirk and his team, there's a link in the description below, or you can call the following number that Kirk's going to share with you and just let them know that you heard about it through this podcast or Jason or Unified or whatever it may be. Kirk, if you could share that number, that would be awesome.
Yeah, it's 720-605-3900. And again, just say that Jason sent you a unified or, however you would acknowledge you.
Whatever
Um,
it is,
yeah,
but
exactly. Or
yeah,
go to the link that you've provided and comes to the same place that just kind of so people know what the expected next steps are. You'll
yes.
call, talk to one of our schedulers. They'll say, what was it that Kirk and Jason were talking about that caused you to want to reach out? It's like, oh, I've got this IRA, I've got this money in the bank, I want to do something with it. Then we'll set you up with a individualized consultation with one of our consultants that'll dig in deep, find out what your dreams, your passions, your goals are, they income or growth goals or safety, what are they? So we can strategically put together something that will stand the test of time and get you out of the path of this hurricane, as I think we are going into an inflationary global meltdown that Trump may have inoculated America from by and large by having tariffs, by cutting government expenses, which is defying um, and 180 degrees opposite than what the rest of the world is.
Uh,
And why does that work for him? Because we're America. We're the largest consumption engine on the planet. If you were a small, dinky little country that's maybe 0.005% of global GDP, your tariffs don't matter. It simply doesn't matter. But when we're as big and prosperous as America is, these policies and initiatives will make a global difference.
100%. Kirk, you're awesome. Thank you very much for your time. Again, everybody, if you want to book a free consultation, nothing to lose, everything to gain, use the link in the description below, fill it out. Somebody will get in touch with you. I want to say thank you to all of you for tuning into my YouTube channel right here. Make sure to subscribe for new videos that are going to be coming out and a lot of daily drops. And Kirk, thank you very much for just giving us your time, being so open with us. Thank you.
It's my pleasure. We'll talk soon.